Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I'm the Director of Education at Trading University. As always, we need to remind you also that trading is a risky endeavor and not suitable for all investors. The chart we're going to take a look at is the Australian US dollar. Aussie USD found resistance here at our risk tolerance threshold level here, just below 95 even. No surprise there. Basically, that's just a retracement level. You go back 4 months. You take the June high and you retrace that up, and you'll see you hit resistance there right around that 2/3 level. The Aussie's come a long ways. We talked about that last time. Initially, it kind of banged its head here. Here was you had resistance. First, you took that high. No surprise. That's where it had resistance initially right there. Then you take that retracement right there, and that seemed to put a lid on it. I think the problem here for the Aussie at these levels is, well, it's been a pretty good rally, but from a fundamental standpoint, the Aussie's really a Chinese story also. A lot of people in that part of the world, particularly in Australia, they joke around that Australia's another Chinese province because the Chinese do so much business there. And, I think what was lost in this rally, the market popped up on the Fed not tapering, but you have to remember the Fed's decided not to taper. They decided to keep buying bonds at the same rate because of a slowdown. Now, if things aren't as quick, picking up as quick in the U.S., which has tended to have led this slow recovery over the last couple of years, then if it's slow in the U.S., that doesn't necessarily bode well for the rest of the world, China included in that. So Australian weakness, and I think it's still a Chinese story. So yeah, you can have a pretty good short covering rally. You can have a lot of retail traders buying dips over there. On the other hand, I don't think she gets a whole lot further than it already has. Now, that's not to say that give us a dip. Give us, now that you have a double bottom, perhaps a higher low might be of interest to traders. Perhaps back down in that 91 handle. We'll have to see. Next market would be the Euro US dollar. We had actually talked about this last week. What if you blew stops above that level, and you did now. And really, we've been licking our chops now for some time, and we talked about this last time. Let's go with a weekly chart, and we are looking at the possibility of a potential double top at that 1 year high there, at the 2013 high. That's a 2 year high, right? 2013 high, 2 year high. So that would be something to look at. That'll get our interest. So if you find us cheerleading the euro higher, it's not that we're all that bulled up on the euro, but we would love the possibility of a double top here. The euro is a story of short squeezes. No doubt about that. That market loves short squeezes. I think we've said it before. The ECB, the European Central Bank, does an excellent job of holding up their mandate, which is protect the buying power of their currency. And you have to respect that. You can't just sell shakedowns or breakdowns in the euro. You've got to wait and sell pretty good rallies. And I think that's going to be the case here. So let's keep our eyes on things here. And, back to the Fed not tapering, again, if things aren't as quick as we'd like to see them in the U.S., then that's going to not bode well for everyone else. Europe has lagged the U.S., and if that continues to be the case, then it makes it even more attractive selling that rally. So I think you've got a nice short squeeze in place, what we call a rebalance. I think the big banks tend to rebalance things. If for lack of a better word, you have a bunch of stops in place in there, you can pop those stops and get everyone climbing over each other to cover, and you get that market up at a nice level to sell, then I think that's to our advantage. So that's what we're looking at in the euro. We're not bullish on it, but we're cheerleading that rally because if we can get it up around 137, I think that'd be a pretty a lower risk trade setup on the short side. Take a look at the pound. I don't cover the pound that much. I know you had the big rally off the non-taper story. And there you could see it. What was interesting is the pound had cleared resistance there before the Fed news. Let's pan out to a weekly chart. Get rid of that level. Yeah, you're right back into resistance. Time you start getting up towards 162, you're running into resistance. See that big wide trading range too. So, hey, I wouldn't mind if the euro keeps going and the pound tags along with it up around 163.5, 164. I think you start looking at sell setups and just look at this as a big wide trading range. And you have to think you'll have at least a 50% retracement of this rally here. And that would be a pretty good downstroke for that market. So that's another one where the higher it goes, the more interesting it becomes for a potential sell setup. Just a big sideways range. Next market would be dollar yen. Fascinating market here. We talked about the rebalance when the big banks in the market, they see an opportunity to rebalance a market when everyone's tended to leaning one way, and I think that was the case here. Let's go with a daily chart. You had a lot of buyers long this market ahead of that Fed number, and I imagine they had a lot of sell stops below 98 even, and they pulled the plug on those. They rebalanced that market, go down there, knock those stops out, get people to come out of their long trades. Your larger banks, your larger market makers get an opportunity to get long at 98 even. Then look at what you're closing for the week now, 99.35. Look at that. So you broke out of that big pennant. You came right back to the apex of it. You knocked stops out at 98 even. You changed direction back higher on that daily chart. Look at that. Even I was a little bit surprised. I'm kind of bulled up on this market. Even I was a little bit surprised that they were able to change the direction, meaning they closed above that high, the lowest closing candle of the move. They closed above that high, that candle right there, bam. That changed direction higher. That's actually a buy signal longer term on the daily chart. So there's a buy signal in dollar yen. So I'm a broken clock here, like buying dips in dollar yen. U.S. stock market. We talked about the possibility of a new high last time we were together. Sure enough, we got the new high. I guess it looks like you're in a big channel. Now you're at the top of the channel. Here's typical financial market behavior. You start to stall out on Thursday, then you get a counter trend correction on a Friday. So very typical the last couple of days in there. Big rally, it's a bull. What can you say? You had a beautiful 50% retracement in here. You actually had to turn things pretty lower. You're actually making some money on the short side the second half of August, but come back into September, they turn that right back around. So maybe we can look for similar behavior here, a correction. I guess the closer you get to October, traders with long memories tend to get nervous because they know there's a pretty good seasonal down in October. So we'll see if that plays out. That's the U.S. stock market. Let's get into commodities. Let's take a look at corn. Corn is of interest, always interest. When corn gets cheap. I don't know if it's quite cheap enough, though. We talked about a potential double bottom on the daily chart, and you know what? You didn't quite get it. Here's what we were looking at. You started to get it, but here's what I would like to see before you go in there. I tend to like to see the RSI above 50. See that RSI at the bottom here? That's a good indicator when it's above 50. Generally, I'm going to go back in time and show you. See here, it climbs above 50 right there, and it gets above 50 right there. And then it gets above 50 right there. I like the RSI to be above 50. Even in a bottoming market, you'll get that RSI above 50, like right there. It's just not there though. So still pretty weak. That's telling me there's probably some more downside in the corn. Let me pan out to a weekly, and I thought I had my line drawn here. I'll give you a level that we're interested in. So they couldn't double bottom it. They took out that left leg, and it just stayed weak. There's just no momentum, no bounce. Here's the level I like, just above $4. So I like corn just above $4. If you can get there, I think you got to start looking at it, and you consider dollar cost averaging the ETF. The ETF, by the way, is CORN. So check out that ETF corn. Watch the corn futures. If they get around $4, I guess that'll be around 32 in that ETF. So that'll be an area to watch. Oh, there's a double bottom in the ETF. We'll have to keep an eye on that too. Oh yeah, you can't rule that out. And look at here, the RSI is bottoming out. It got above 50 here, so that'll be interesting. Yeah, watch. So potentially watch this. Watch for a double bottom here. If you get a turnaround on a daily candle, you get a big green bullish reversal there, or bullish engulfing candle, and that RSI is up around 50. Then take a look at that long-term buy signal in corn in the ETF. So keep an eye on that. Gold, as I was saying, it'd be interesting if you got a double bottom down around 1200. You didn't. I was saying it could be kind of interesting if you got a lift off of this trend line. You didn't, though. It sliced right through it. Kind of cool. You did get a pretty good rally. All the asset class markets, and gold kind of a pseudo asset class market. Technically, it's not an asset class market. There's no interest on it. There's certainly no dividend, and you pay to store it too. So there's a carry with it. But it tends to run with the asset class market. So it got a boost on Wednesday from that Fed news, from the no taper news, and it's holding on okay. I think, from a longer term perspective, though, I'm not crazy about it. I think you have to buy a dip on it. There's your weekly chart, and there's really nothing to write home there, is there? So I consider, gold, I think will be interesting if you get a double bottom down around 1200. Stay tuned. Last market we're going to cover is crude oil in the commodities, and something's just telling me that this market wants to come down. We were saying in the midst of the trouble in Syria that I was surprised it wasn't higher. Now it looks like you had a fairly sound political solution in Syria now, with them agreeing to get rid of their chemical weapons, and it really hasn't gone down a whole lot either. So you're stuck in this big range. If you're you're an airline or you're a railroad company, you don't like seeing it up there. On the other hand, they're probably hedged up too. So I don't know. Something tells me this market's going to fall apart, but it hasn't done it yet though. So it's just stubborn hanging around up there. If I was a gambling man, I think it goes lower. On the other hand, you can see if it holds that trend line or it just holds 104, you'll continue to wear out the shorts. But this would be something, perhaps if you get that seasonal down in stocks in October, maybe it takes commodities down with it. Thanks again, and we'll see you next time.